Good evening, everyone.
Just
Very glad to see such a show up of the audience despite the rain. And I'm glad that we're running a fireside chat because I do believe that there's some fire and keep everybody dry. And maybe first of all, a bit introduction of myself. So I started as an environmental scientist, and I stand in the intersection of banking, sustainable finance, consulting, and now a bit of virtual asset. I'm still trying to explain to my parents what I exactly trying to do. But my latest role is in SocGen. I was leading the global markets, Asia Pacific, sustainable investment, product structuring, client advisory, capacity building before I left there end of last year. And now I'm advising a fund which is called Sunlight Partners. It's an Australian headquartered hedge fund, which is targeting uncorrelated returns with the environmental impacts. And now sitting next to me is Musheer. I'm sure a lot of people have been in his panels and discussions. But for those who didn't know him, Musheer is one of those people who has this intimidating background that I'm being very cautious that I'm taking a risk to do a fireside chat with you because you have this background in financial markets, in fintech, in advising governments, starting your own company, Asia, FinStep Asia.
Yeah.
So you're one of the people who are actually very good at doing fireside chat yourself. So I'm actually taking a real risk here.
I'm glad you are. Thank you.
But I think I'm going to do my best and just to make sure that we're on track today. And so on a more serious note, Musheer is someone who has been in the intersection of traditional finance and emerging digital assets ecosystems. He co-founded the Fintech Association of Hong Kong, and he had been contributing to the development of Dubai's VARA, so the Virtual Asset Regulatory Authority. And he advised the institutions like the BIS Innovation Hub that has the correlation with sustainability, green finance. And so he's the person I see that is knowledgeable and not just someone who's observing the industry, but also having a part shaping this whole industry. Now, particularly interesting, our topic is about token bytes, right? And about wealth inclusion. So essentially tokenization and wealth inclusion. So maybe first of all, a show of hands here quickly. Who think him or herself has a good understanding of tokenization? Raise up your hand if you think so. Only two? What about the others? So it looks like we have a slightly tokenization literate audience today.
So byte.
Token bytes, yeah. The token bytes. Maybe I think this is why we're having this discussion here, right? So really talking about what's real, what's the hype, what really is tokenization, and what is the market like? What are the opportunities that are investable? So maybe let me start with a big picture question for those guys who didn't raise up their hands just now. Can you talk about what tokenization really means in a way that it's not technical? I know, in a way that you try to explain to your grandma.
Yeah. Fortunately, my grandma used to be very smart. She's no longer there, but I gained a lot of my reading of newspapers because even at 80, she would read 2 newspapers every day. But firstly, thank you to Igul and Belinda and WLAB for having me here, and also to Vlog Properties. Been fortunate to be a member of the community. Lovely space. If you're a startup, do look to join as a member. It's great. And the Quarry-based space is amazing. I see some friends in the audience who know a lot more than me, so please bear with me if I'm not accurate, correct me. Thank you. But thank you all for joining us. Typical Hong Kong rainy night as we head into the summer, but at least not as humid. And the conversation around tokenization, I think, is often mixed up with crypto, right? So I'm going to just take a step back and say, what are we looking at when we say tokenization, right? Nice to have jargons, nice to have a terminology as well, which is important. But largely the first step to think about is, okay, we now have over the last 15 years in particular, since the invention, if you can use that term, of Bitcoin, a methodology where technologically you built a network that recorded information, which is immutable and transparent. Immutable being cannot be changed, transparent being anybody could see it. And through that, there was the ability to transfer an asset. In that case, in Bitcoin's case, being Bitcoin itself, right? A digitally native asset created online, right? So a simpler version of that is if you've played any mobile game, right? In particular things like Age of Empire or Temple Run or one of these things, or even Super Mario for, the slightly older millennials like me, you would be collecting coins or tokens, right? And then you're using them for other things. So this is a way that's being done digitally online. Right? That was the concept of a blockchain, right? Now, another way to think of a blockchain and data is how we use shared Excel sheets, essentially a Google sheet, right? And I'm assuming most of you have at some time or the other used an Excel sheet. Would that be correct? Anyone who's not used an Excel sheet, I can explain that to you as well, possibly. I'll try. But essentially, previously with Excel sheets, what was the process? If you or your colleagues were working on a certain project using the Excel sheet, right, it would only be possible to execute at it one person at a time, right? So I work on it, then I email it or send it through my online transfer to Amy. Amy sends it to Igul. It was in sequential order, right? And you could not simultaneously make any changes or view the changes. Then came Google Sheets, which said, hey, you can share your sheet collectively and everybody can see what's happening in real time. If you wanted to, you could set the permissions in a way that the data is not changed by everybody. So it can be view only, right? So somebody who's a junior analyst can have a view only access, while the manager has edit access, and big boss also has edit access, as an example, right? That's somehow what blockchain brings to the table, which is you can now have assets that everybody can have a look at. You can set what's permissioned to in terms of viewing or editing rights. But the key difference in a blockchain to an Excel sheet, in an Excel sheet, you can go back and, so let's assume we have 50 rows of data, right? You can go back to row number 20 and make a change. And based on the formulas, all of the data below from row 21 to 50 change, right? In a blockchain, because of this immutability, you cannot change any of the previous information. You can reverse a transaction or put it in at row 51, canceling out the previous rows as it is. And that brings value because you now have a source of truth that everybody has access to viewing and has not been tampered with, largely speaking, right? And now because digitally you can transfer this between people who are using the blockchain, you had a digital asset that could be transferred. Tokenization essentially came in as a way of bringing in not just digital assets, which is, I spoke about Bitcoin, but there are now 30,000 tokens or coins listed on CoinMarketCap at least, right? And maybe thousands or tens of thousands more, which we may not hear about. But tokenization essentially said, okay, you have a physical object, asset, product, whatever you want to call it, property as it is. How can we bring this on the blockchain, right? So tokenization is having a digital blockchain-based representation of a physical asset, right?
And what asset can that be?
And that can be across, right? So it can be ranging from a very simply put a financial bond, right, to money, which we have stable coins as an asset, to property or art, right? So you have a mix of all these. And here we are sitting in VLOC, and it's called also gallery, right? So you have both art and, so one of the early representations in tokenization that gained strength was NFTs. How many of you here have heard of NFTs? Yeah. So more of you have heard of NFTs than tokenization, right? Now, there are two of you who raised your hands in terms of being familiar with tokenization. Besides that, the others who raised their hands for NFTs, what does NFT stand for? Do you know the non-fungible token, right? So you do know about tokenization because that is a representation. NFTs were largely non-fungible, meaning they cannot be replaced like for like. Like if you had a $100 Hong Kong dollar note and I had a $100 note, and if we exchange, the value remains the same. They're fungible, right? They're like for like. Whereas with NFTs, they have their own unique properties and they could be very identical, but in terms of asset ownership, they're different. Almost like when you consider a limited edition watches or anything else, there's a number to it, right? So even if you exchange that with somebody else, there's a difference. It's number 49, number 50. So there's a slight difference in that. So that's where NFTs came in. But that was majority of NFTs were largely art, right? Both digital and physical NFTs. But I'll come more to, but that's broadly how we're talking about tokenization. The second element that I want to just bring to the table, which often people confuse, is tokenization and fractionalization, right? And I'm not trying to be jargon heavy, but it's an important element of why tokenization has taken off, right? So tokenization is putting an asset on the blockchain, right? Now let's just keep that as simple. Fractionalization is when you break that asset into multiple pieces, right? So a crude analogy for that is apartment buildings, right? So an apartment building, let's assume, has 10 floors, 10 apartments on each. So you have 100 apartments in that building. When you read your title deed, you have two elements. You have ownership to that physical apartment, and then you get a small percentage, of those of you who paid attention, of the overall property. Let's assume the property is 10,000 square feet. 1,000 apartments is, each of you getting about 10 square feet, right? If that property is raised, you have ownership of 10 square feet, which you really can't do much about, but that is fractionalization there, right? That's being given. So you can break down that tokenization by fractionalizing a property or any asset. It could be a multiple, and we'll talk about examples through it. But that's one distinction, that tokenization doesn't always involve fractionalization. You can have one whole property as one token. So it's only traded as or exchanged as the full product, or you can break it down into multiple pieces, which is then fractionalization. So, thank you. Slightly longer, but I hope that helps give context to everybody as we go into more detail, and we'll try to be more shorter with my other answers.
I was trying to take some notes as well with my pen in my pocket. So, and can you talk about the market right now? We heard a lot about the RWA tokenization, and it's like soaring. There's Dubai, Hong Kong, Singapore. Everybody's trying to do something. What is the market like? How big is the market?
Great, and we forgot to do this at the start, so I'm going to do this now. What we are speaking about is not investment advice. Please do, take your own discretion, speak to a financial analyst or your advisor. And as the Gen Z say, DYOR, just do your own research. Right? So keeping that in mind, and this is knowledge sharing, coming back to Amy's question, RWAs is essentially real world assets, right? It's just a way to say you're tokenizing instead of digital assets like cryptocurrencies, etc. Right? Bitcoin, Ethereum, Solana, etc. are digital assets, right? Real world assets are digital blockchain representative of physical assets. So real world in that sense, right? Now the market is slowly growing. We initially have seen a lot of the major financial institutions looking to tokenize bonds, right? And this goes back to many years before Amy's previously been from SocGen. They have a subunit called Forge, right? And Forge would do tokenized bonds, right? Closer to home, so
structured
products as well. So more complex financial products. That's still an RWA. In closer to home, the Hong Kong Monetary Authority, the largest issuer of green bonds in Asia, has also tokenized their green bonds, as an example, right? And then you have other elements like tokenization of property that is being looked at, and we'll touch upon why there are challenges with that. But I've had that, but the market was primarily driven through financial products initially. Major markets include Hong Kong, the Middle East, Europe to a certain extent as well, and the US, of course. Right? What we are now seeing is this transition from tokenizing select products to now seeing a broad range of tokenization of everything, right? So the CEO of BlackRock, Larry Fink, was absolutely against Bitcoin and crypto 3-4 years ago. He changed his opinion in the last 2-3 years. I don't know him personally. I haven't followed him too close. But part of the reason that he's changed his opinion is down to regulations. And that is something, we are in one of the most regulated markets in the world. And that's a big element of why markets grow. So you now have comprehensive regulations in some of the world's leading markets, including Hong Kong, Singapore, Japan, UAE, EU, UK is coming up with things. US is sorting it out. So then that gives you, as a financial institution, more to look at. But what Larry Fink is also, he calls Bitcoin digital gold on one hand. So that's a cryptocurrency, and we don't have to step into that. We'll do a comparison later, maybe. But one of the things he speaks about is tokenization of everything that BlackRock offers. Right? That ranges from equities to bonds to funds to ETFs, etc. ETFs are, and so they have Bitcoin ETFs and other ETFs and other money market funds, etc. That they're looking to now tokenize. Right, so that market is expanding significantly, and almost even Jamie Dimon, probably the last of the major banking CEOs, who was very much like, I hate Bitcoin, I hate crypto, this is a scam, and his traders, and they're setting up a big team which is working on tokenization and blockchain, changed names, big teams, has also come around to it right, recently. Not that he's investing in crypto, but the key element is you're seeing tokenization almost separately to crypto. It's about what access it can give, what technology elements kick in, which don't involve crypto. It is about you have a real world asset, be it, as I said, multiple assets, which now you can offer and trade, etc., without having to think about the valuation, etc., of a product you don't understand, a Bitcoin or an Ethereum, which is largely speculative for most people. So yeah.
Yeah. So also from what you have said, Musheer, it's the understanding that people's understanding also change, right?
Yeah.
In the beginning, they could consider this as an illegal or scammy kind of topic,
Yeah.
especially given the 2022 crypto scandal.
Sure.
I guess people's mindset also evolves a bit. But with the regulation, I think the market is getting more clarity on the regulatory direction. So less uncertainty, which is better for investment and capital. So today our topic has another element, which is financial wealth inclusion.
Yeah.
And can I know, you spent like almost 2 decades in capital markets, in virtual assets, and you've been advising regulators as well. What is your light bulb moment looking at these two topics? There's actually a correlation between the two, and one can actually help in the other.
Great question, and I'm aged now as a millennial, but more so, I think I've looked at blockchain and Bitcoin, etc., for probably 13, 14 years. So my first decade was spent as a trader, and when you're trading, the noise around Bitcoin, even in 2012, 2013, some of you who may know, there's a massive crash and a scam involving this company called Mt. Gox, which is millions of dollars at that time. You also had this website that was selling drugs called Silk Road, which was raided, which largely operated using Bitcoin as its payment mechanism, right? So I was aware of it, but didn't really actively involve. When I moved to Hong Kong 12 years ago, post my master's, the first job I did was as a consultant, and the company I used to work for, Grace Park Partners, had released a report, Use of Blockchain for Capital Markets, right? This is end of 2015. So fairly forward-looking use cases. So that's kind of was like, oh yeah. And then we were going and talking to CTOs of big banks, and half of them were like, what the hell is blockchain? And some of them were like, yeah, we understand this, but we're never going to use it because it's not great. But for me, the change, there were two probably moments that you can talk about where I was like, yeah, this is really going to be serious. One is there was a NFT, and still is the most expensive NFT sold, by an artist called Beeple, right? Beeple, right? And he had created this NFT that chronicled 500 days of him creating digital art, right? He's a digital artist. And that was sold for, if I understand to be correct, but I think roughly about $69.5 million. Was bought by an Indian origin man in Singapore, whose online name is Metacoven, right? Which means metaverse meeting the king, which is in Tamil. But long story short, now that was a big moment because you now had this digital asset that was sold for $70 million, setting like a benchmark as compared to even the most famous paintings in the world. For an artist, was relatively unknown, even in the digital art world per se, right? So that was like, okay, now this is getting serious because a lot of money going in, right? And if I have to take a second moment, happened in 2021. Some of you may have heard of this hedge fund called Citadel, right? One of the world's largest hedge funds. CEO's name is Kenneth Griffith. And in 2021, the US Constitution, right, it's coming to 250 years, there are a few dozen paper copies of the US Constitution, right, written in whatever papyrus or whatever paper there was at that time. And 95% of these are owned by museums, right? Or by the government of the United States or their entities. So not in private hands, let's put it that way, right? There are only a handful, maybe a couple or 4 or 5 of them, which were in private hands. And one of them came up for auction. And now why is that interesting is because, okay, now this is a valuable piece of history. Beyond if you're American, it's a very proud moment for you to own a piece of that history.
How much is the one copy?
One copy. So this was the bidding that was going to take place. So it was Sotheby's auctioning this, right? And so this is where the second moment came in, where you had this structure called decentralized autonomous organizations. It's a blockchain world of saying we all own everything together, but in a decentralized way. Everyone has kind of equal ownership, and you join and you take decisions collectively, governance, etc. So there was a new DAO created, DAO, Decentralized Autonomous Organization, called the Constitutional DAO, whose sole purpose was to collectively bid to own this constitution piece of, the constitution copy. And they got very close. They raised $40 million, and Kenneth Griffin bid $43 million, right? So not too far off. And so that was another example of saying, okay, here's a piece of history which people can own and have, they would decide collectively where to display it, right? And each owner who's contributed gets free access to that space, etc. There may be a revenue model by, if you have it in the museum, whatever revenue gets generated gets shared. So this was real, right? This is again an example of people coming together to contribute and own an asset. And that's where the broader conversation about wealth ownership and how tokenization and these type of systems can change. Like even millionaires would be like, oh, it's 40 odd million. I stand no chance, right? Unless you have a net worth of maybe 10x that. Like usually people don't bid for things which are more than 20% of their asset, and maybe even lesser, right? So if you are not a 500 million or above, which is a few hundred people or 1,000 people in the world, you're not going to go for it. So this changes the way people think about wealth and access, and that's probably for me the two major moments where I was saying, okay, now this is going to be a lot more impactful, done legally, done in the right way, as such.
And out of curiosity, I noticed we have at least one lawyer in this room. So I think one question this person is probably interested to know is, so many people owning one thing, right? How do they actually own it? How do you actually make a decision? So if they want to put it on an exhibition, where does it go? Like, how do you decide?
So DAOs have their governance structures, like a vote that people will collectively take because they collectively own a property, own this asset. Sometimes this is like a conversation where you have societies where collectively all the flat owners will take decisions on maintenance, multiple elements. It's similar governance. So there's a governance set before somebody signs up, and they agree to conform to it. And there's a voting mechanism. There'll be a 60% or 70% threshold. So you'll bring in all of these elements to run these activities. Typically, there's maybe 10 to 20 people who take more charge and are delegated access for taking the final in-person physical decisions.
Right, like a company,
like a company. Yeah, you could say that. Yeah. Right. In many instances, yeah.
Yeah, and then zooming in, I'm going to throw out some numbers.
Sure.
I read the World Bank report, and it says like we still have around 1.4 billion people, adults in the world that are unbanked.
Yep.
But if you look at the tokenized real world asset market, it has grown over 300 times in just 3 years. Now standing at $25 billion. And we're talking about tokenization. How does that help wealth inclusion? And you talked about a little bit on that concept. I just want to zoom in a bit. Like, does tokenization actually reach those people who are unbanked, whom we actually want to help? Or is tokenization actually helping the wealthy guys getting richer or wealthier?
Great question, right? Quite often when we think about digital finance or financial inclusion, very, very important element, right? 1.4 billion, that's 20% of the world, still unbanked, right? In certain emerging markets, people have more Facebook accounts and probably now more TikTok accounts than bank accounts, right? Systemic issues, threshold for accessing banks, etc., is very, very challenging. So how did central banks and governments, etc., solve this to a certain extent? There were much more. There were $2.5–3 billion people who were unbanked a few years ago, largely through digital wallets and mechanisms that allow you to own a wallet, like a payment wallet, like an Alipay or a PayMe, etc., which has a much lower KYC requirement In fact, you could, in certain instances, open that wallet without having done full KYC. But there will be a restriction on, say, 3,000 Hong Kong dollar transactions only, right? And there's caps, etc. This is to try to bring people into the digital finance world, right? That's not a full bank account. So you're not owning a bank account, but you're owning a mechanism to do payments, right? Now, when it comes to tokenization, I am of the belief that tokenization per se is not going to move the needle much for financial inclusion, right? There are elements of digital assets such as stable coins and others, which are helping with some financial inclusion in markets where the financial system or the economic system is not great, or there are high inflation, etc. So, you want to do a remittance or a transfer, it's physically not safe, or your currency is falling, rapidly. You would then use a stable coin or a cryptocurrency to make those transfers. So there's more stability in your income, right? Or what you're transferring. But that is helpful, and it's also lower rates as compared to, say, standard remittance. But when it comes to tokenization broadly, I don't think it does make too much of a difference to financial inclusion. I'm ready to be challenged and corrected. If others have a view, please do let me know. Where I do think it makes a big difference is often we mix up financial inclusion to a certain extent with wealth inclusion, right? And many times wealth inclusion is not paid enough attention to.
What is wealth?
What is wealth, right? Yeah, so it's a good question. And I've recently been seeing this. And I will admit at 2 a.m., an Instagram video where a lady comes in and says, being wealthy is not being rich, right? And that stuck with me. And then I had a regulator, kind of a regulator from US visiting Singapore, and we were chatting, and she's talking about how she's telling this difference to her daughter. And then it even more stuck in my mind. Meaning, being rich is owning certain amount of wealth, right? If one of us wins the Mark 6, please throw a party, but also you then are rich, right? But doesn't make you necessarily wealthy because you could spend it immediately. Wealth is when you're growing it, it's constant source of income that keeps coming in, right? Or maintained at a certain level versus just owning an asset, right? And it's like you own an apartment doesn't make you wealthy, not necessarily. You own a building which is you're renting out, etc. Probably then makes you wealthy at the same level. There's a big difference. Now, coming back to that concept, so that would be the key differentiation. And how I see wealth inclusion, tokenization impacting that wealth inclusion is, let's just take the US, for example, right? The largest economy in the world, right? Per capita of 70, 80,000 US dollars. However, you're hearing and seeing a lot more conversations around people struggling economically, right? Inflation is having an impact, and it's across the board. And it's not just people who are at the lower end of the economy, it's also the middle class who's suffering, while the stock market is new highs and everything else. And this is not me taking an economic stance or saying what is right, what is wrong, right? I'm just talking about the distinction where there has been a significant increase in the value overall, but not everybody's participating in that growth of wealth, right? And that's where I'm talking about wealth inclusion as where tokenization can go. So are people getting included in that growth, in that wealth, that access to wealth? And that's where the tokenization piece comes in potentially providing some access to wealth. And I'll take another analogy which is related, and it's the next step. I think of tokenization / blockchain / crypto as the next level to fintech, right, or digital finance. And qualifying from that, when we had COVID, one of the things that had a big uptick was online brokers, right? Especially in emerging markets. Like in India, the online broker market grew massively. Some of them became bigger than physical or regular brokers or traditional brokers, largely because people now had access. They did have access previously, but they were at home, they had more time, they could do research. They don't have their boss looking over their shoulder or having colleagues who snitch on them. But essentially, they got to then access and participate in the stock market. And that kind of kept the stock markets very busy because you now had people actively participating. That is part of wealth inclusion, right? That petered out later on as now people know, okay, I can also trade. I can trade online. I don't have to call up a broker and everybody listen to what I'm saying. I can just do that on my phone. I can choose what I want. I don't have to, if there's a news impending, I don't need to wait to call up my broker and say, okay, there's a disruption in the Middle East, oil is going to get impacted, or I want to purchase shares of an oil company, right? I call up my broker, he'll give me 5 options. I think about it. By that time, that price is gone, right? Or if it's midnight in Hong Kong and it's midday in the US and the president says something and this is going to impact, through your online connections, Interactive Brokers or anybody else gives you access to the US markets. Now you could do that immediately. Whereas if you call your broker sitting in Shangwan, he's probably at home sleeping somewhere, right? And not going to answer your phone call either. And he can't even trade that right now because the Hong Kong stock market is closed. So that was the digital side of things. Now with tokenization, what you are getting is potential access through fractionalization, right? So let's just take the simplest conversation around property. So earlier, you typically, as an individual, have to purchase a property, right? And we are in one of the world's most expensive properties and one of the highest Gini coefficients in terms of wealth disparity. And I think the statistic, and I'm sure of it, but it may have changed or worsened since I heard it last, is that an average person in Hong Kong, in their average lifetime, earning an average income, will never be able to own a property, right? Given the average price of a property in Hong Kong, generally speaking, right? Now, how do you change that? So you have instances, and the same in many emerging markets is, if say the apartment's worth 10 million Hong Kong dollars, okay? If that can now be split into 100 parts, let's not think thousands, let's just say 100 parts. For those of you who are good at maths, that would be 100,000 Hong Kong dollars, right? Immediately changes the game, right? And this is about, okay, I can now have this. It's not about living somewhere, right? It's about earning the rental yield, maybe, right? Now you have an access to that, which you did not have previously. If it is a commercial building, you again have access to commercial building payments, right? Doesn't necessarily always be very attractive, but this is just an access that you have. Now you can start moving up the ladder on this conversation. And that's what excites me the most, right? So Brian Armstrong from Coinbase, the CEO of Coinbase, probably the largest exchange in the US, also have significant ownership in one of the largest stablecoins, which is Circle, a big proponent. He's been talking a lot about this as well, right? So that's one of the inspirations for this topic, was looking at what he talks about. I don't necessarily agree that the wealth inclusion will go down all the way to different players, because you could tokenize so much, but at a certain level, when the underlying value is small, even if you tokenize it, the uptake isn't too big, right? So you could get some wealth, but not necessarily wealth, you just get some returns, essentially. But coming back to that, so that's an example of simple property, right? Spoke about now let's think about, that's for a middle-class person, probably lower middle-class person, who now has access to getting rental income, both commercial and physical and residential. Now let's assume I am mass affluent, as the term goes, right? I have maybe a couple of $1 million, Hong Kong dollars, or $3 million savings with me. I want to get some exposure to slightly more complicated, more complex, or high-value products, right, or assets. Now that could be owning a certain special asset, like a limited edition Patek Philippe watch, which is worth $10 million, expected to go up in value. And I'm not promoting Patek Philippe or the value thereof, but long story short, that could be the case. Maybe now, if that's worth 100 million, I get to participate at $1 million or $500,000 as a participation. Now you're going up. Yes. Then it could be somebody who is looking at a yacht or a ship, for example, right? It has been tokenized in Hong Kong. So I'll talk about ships, right? So even professional investors have $1 million worth or higher, don't necessarily have access to purchasing or owning a commercial tanker or a ship, right? So Evident Capital tokenized an LNG carrier, right? Mm-hmm. Which then is breaking down something worth millions of dollars, US dollars, into more bite size, which now even professional investors who didn't have access can get that. So you can keep going up the value chain, but largely doesn't. Here you're bringing in more access to products which people didn't have before. So it's not about the wealthy becoming wealthier. It's actually helping others down the value chain start participating in these
The access.
And you start getting exposure growing slowly, a bit like think of the concept of mutual funds and that came about, right? Where it's okay, you can now participate. So in many emerging markets, they have special tax rebates for you to invest in stock markets through mutual funds, right? To start people, and they have these systematic investment plans, just small amounts, largely to start making people understand the concept of investing, start building a bit of wealth beyond their day-to-day life at whatever level. So this tokenization then brings you the ability to fractionalize large products, which you can then transparently see and distribute. And it's got nothing to do with cryptocurrencies. It is just being on the blockchain, providing you that access and the ability of efficiencies to be able to potentially trade them 24/7.
I'm going to stop you here.
Yeah, please.
Because you can keep talking. I think I just want to make sure folks here get time to ask questions.
Definitely, yeah.
Before they ask any questions, I usually take the privilege of being the moderator and ask the first question. Please allow me to do that. Let's make this tangible, right? So for me, myself, I'm a first-generation investor in Hong Kong. I have no family wealth. I have no financial advisor. What does tokenization look like to me in 5 years? And how would I benefit from it? And what can I own?
Great question. I think we've spoken about a few assets. How does tokenization?
Average person.
Yes, you are. Not. We're in the early stages of tokenization globally, right? Very few regulators have framework, as you mentioned, a handful, and we'll then start seeing that come to the broader retail mass affluent market. Good example is tokenized gold that HSBC has been offering for over a year and a half, right? That's a small product that have started. Now there are plans for not HSBC necessarily, but other financial institutions start offering some other products, which the HKMA or the SFC says, okay, this is allowed for retail investors, a bit like, you could get bonds exposure potentially. In 5 years' time, I do expect that a lot of the equities and major financial products will be tokenized, at least in the US, potentially in Hong Kong as well. But the US is moving very fast on tokenization of financial products because the biggest financial institutions want it. The regulators have changed, and they also are in an approval for that. And the big exchanges like NASDAQ have put in the applications to tokenize this. So you have that all of those things coming in together. So we will hopefully see that impact in Hong Kong. Are we technologically ready for it? I'm not so sure, but that's one part of it. The other element is for you to start thinking about 5-10% of whatever your investments are in terms of looking at alternative investments or non-traditional investments. There could be that opportunity that comes in through your private banks. Could be data centers. Yeah, tokenization data centers is one example. Looking at the AI economy, again, not investment advice, but data centers become very important. Potentially solar become very important to provide energy for these data centers. How do you participate in that, right? If somebody's tokenizing that, SSC allows that as a product, then you have access, and that is a possibility. As I mentioned, one of the other things that happened 10 days ago, last week, is the SFC is going to permit secondary trading of RWAs on the VATPs, the virtual assets trading platforms, essentially the crypto exchanges. They were largely restricted to trading certain cryptocurrencies only, but now with this new circular, with a lot of guardrails, and I won't go into the details, it now allows RWA listing and trading on these VATPs. Why is that important? Because let's assume you tokenize this property, right? You have that. Now, if you had a wedding plan, or you had your child going to university, or you had a medical emergency, or whatever reason, you want to sell this token, you now need to find a buyer, right? Which usually is facilitated by the seller, but that's primary issuance. It's more challenging. If you have a secondary platform where you can sell it, then the liquidity comes in. More people are likely to buy something that you can sell easily, right? So that's another important element of why, from a Hong Kong perspective, that makes a big deal. Very few global regulators have allowed that to happen at this stage. And that, Dubai is a classic example where they are working on it. And so this makes a big change. So you will have a lot more access.
Yeah, Dubai, speaking of which, I saw Dubai tokenize their horse racing.
Yes.
Racing horses.
Yes, correct.
Yeah, which is
a
pretty
company
cool.
Called which has its origins in Hong Kong, Scott Thiel and team. Yeah, they have tokenized horse races. So you could own the horse and whatever winnings it gets, part of it is there.
That's
a
really cool.
tokenized
Yeah.
horse.
I hope the Jockey Club in Hong Kong can do that, and we can put it on
Potentially,
the-
yeah. If they are happy to do it, then all goes to charity in any case, most of it.
Okay,
Yeah,
I'm going to
cool.
stop here. Feel free to ask any questions.
Thanks, Musheer, for sharing about the tokenization. I had a question.
Sure.
About the public see that changing. I've seen on sort of on-chain with more like X-stocks, for example, now they're trading on a public blockchain as well.
So for the broader audience, the conversation here is when we say public or private, I go back to my Google Sheets example, right? So think of a file that is accessible to everybody to view, right? That's a public blockchain. So everybody, so Bitcoin, Ethereum, the major assets are and their blockchains are public. Everybody can see all transactions, all activity that's happening, and everybody has access. There's no restrictions. Private blockchains are either forks or drawn out from some of these public blockchains or are created by institutions which restrict the access. It's a bit like closed loop. Only certain people can see or get access to it, and permissions to view, etc., are very strictly set. So it's a closed loop conversation. What is now happening is you have this conversation where there's a lot more efficiencies in being on a public blockchain, right? Because of the reach and everything else. While private blockchain is largely driven by financial institutions, they want to keep it in their loop. We are now seeing a point where people have started talking about public permissioned blockchains in some senses, where there's privacy layers that are brought in. So it could be a public blockchain, could be a fork of a public blockchain, or what are known as layer 2s, which are another layer that are built on a public blockchain of a layer 1, which then provides only the transaction is marked, but you don't know where it's coming from, what's happened, all of that is masked, right? So then, because as much as transparency is great, one of the main features of GDPR, which is European data privacy rules, is the right to forget. And with blockchain, you don't forget, right? But also, you don't want all your transactions, your financial transactions, to be seen by the whole world, right? Be it individual or institutional. And there is requirement. I mean, there's regulatory elements to it, there's privacy elements to it. So being able to mask that was one of the challenges, but we're seeing solutions come up. And there's few chains like Canton Network and others who are also working on these, which could then allow for this use of public blockchains. Because what is the advantage of public blockchain versus a private blockchain, right? Let's just take Google Sheets. Do you need to do anything to access it beyond having a Google account? No, right? You don't need a special computer. You don't need anything else, right? If it was a special access, you need to download an application, you need to have the right compute, all of these elements. So with private blockchains, you then will need to put in a lot more into infrastructure, has to integrate with a lot of other things, whereas public blockchains probably are already integrated with many of the other elements that are needed. So that's the advantage. And there's always this conversation, there's this big pushback happening, and regulators have largely led on saying, no, it needs to be permission blockchains, not public. But we are starting to see some middle ground come, and I do think it'll be more positive in the next year. I hope that answers the question.
Yeah, I saw Rebecca has given the ultimatum for the time is up. So we're gonna close the discussion, but the discussion is not yet closed.
Maybe another question if you're okay, I go.
Then you can obviously I won't have time.
Yes, please. Yeah. Yeah.
Just one last.
Sure, please.
Yes.
Mm.
Similarly, in blockchain privacy incentive.
Yeah.
Why am I going to use it? So in a few years' time, even though I offers IoTs, right? Why am I supposed to use it if there's no incentive for me to incentivize?
Great question. Do you have your thoughts? I can also add. Yeah.
I think it's two sides, right? First of all, you're using the technology to generate something good, like convenience. That's a good thing. Instant settlement, that's a good thing. Giving liquidity, that's also a good thing, to move the capital around and moving the capital to where it's actually needed. The other side is limit the bad thing. So we also talked about the damage created by blockchain because it's very energy intensive. But with technology development, there are different standards created to make the calculation more efficient and less carbon intensive. So I think technologies are evolving. We can't say like right now, this is the time of the point of time that we're looking at what benefit and cost this technology is generating. I think it's a moving angle, right?
My quick answer would be, how many of us talk about Java beyond knowing that it's an island in Indonesia, right? But it underpins all of the things. But if 15, 20 years ago, if you were using apps or on your mobile phone or even computer, there's a lot of Java, like download Java, understand Java, blah, 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 right? Blockchain needs to be that in 5 years' time. You shouldn't even be concerned about it being a blockchain. You just need to have the incentive of the fractionalization, the tokenization. These are all mechanisms that can be achieved with digital, but in a longer rooted way and not in an as efficient way. Blockchains, just think of it as infrastructure and upgrade. And when you're coming with a decision of digitalization, are you happy with what you have? If yes, great, you don't need an upgrade. Or when you're going for a next upgrade, okay, here's your shinier new product that you can use, which then has this efficiency. It's a bit like, I have a phone. I mean, my iPhone XS, which was my last phone 6-7 years ago, is working perfectly for me to answer calls, right? And look at my emails, and then takes normal. But after 6-7 years, the battery became bad. I upgraded, but now the camera is different, the speed is different. You know what I mean? So that's essentially where you're looking as a technological advance. But beyond that, as I mentioned, some of these elements of fractionalization, efficiency, breaking it down, all of these are non-crypto elements. These are infrastructure elements that kick in, and that's the advantage.
Yeah, and also the infrastructure is different. Nowadays, we don't use fax, even if we have it, right? Because the world upgrades. If you say no to IoT...
There are a few regulators who still use fax, so no comment on that.
Still some government department.
Yeah,
but great question. Thank you again for all your questions. We're going to have, maybe I'll pass back to Ego too.
Thank you so much, Amy, for moderating us. Thank you so much. Yeah.
Thank you, Musheer.